Mark Selby, Chair and CEO of Canada Nickel, advancing the Crawford Nickel Sulphide project, one of the 5 largest nickel sulphide resources globally. We're completing a feasibility study this year, and we're fortunate to be located in Timmins, Ontario, which is a well-established mining camp, and we're advancing this project towards construction later this decade.
Mark, good to have you on board. Thanks for getting up so early to talk to us. Appreciate that. Just put out a press release, large-scale discovery at Reid. What can you tell us?
Yeah, so very, very exciting. So we had earlier in the summer talked about the first few holes there, but this is one of 20 plus properties that we have. And what we released today was 16 holes that have literally delineated a mineralized footprint that's 90% of what we already have at Crawford. And Crawford is the 5th largest sulfide resource across all resource categories. Is over 5 million tons of contained nickel, and the footprint that we've got established there in terms of the size of it is almost, as I said, about 90% of what we have at Crawford. And there's still another sort of almost double that to go at Reid. So the big takeaway, one, it's great to make another massive discovery in a market that's short of nickel resources in North America and Europe, anywhere outside of Indonesia, effectively. But number two, in terms of, we acquired this 20 plus target package on the basis that we've got this sort of geophysical footprint that allows us to really target the kind of mineralization we're looking for. And so the results at Reid, plus we had some results from a few other properties where we hit 33 of 34 drill holes, hit the kind of mineralization we're looking for. So, that really increases the confidence that the other 42 square kilometers that we have, are going to deliver. The success rate of being able to hit that other 42 square kilometers, continues to increase every hole that we drill that hits the target mineralization that we're looking for. So, we really, really are talking about a very large Timmins nickel district, not just the Crawford project going forward.
Right, but the problem with projects like this is for you is grade and perception of grade.
Yep.
Metal in the ground, no good to anyone. So
yep.
What can you point me to which would lend me to believe that projects with this kind of grade are going to get financed and then get mined? Yeah.
So, in terms of the nickel space, the grandparent of these deposits is Mount Keith in Western Australia. It's at a 0.5% head grade, but it's there's higher set of cost structures there. So that's why it works at that grade, and we can work at even a lower grade because of the location of where we are in Ontario. BHP is is pursuing Oz Minerals for a several billion-dollar bid. One of them is the Prominent Hill mine that's been operating now for about 15 years. The second asset that BHP wants by taking out Oz Minerals is a nickel copper deposit that's 0.3 nickel and also has 0.3 copper, literally in the center of Australia, almost 1,000 miles from anywhere. So again, if the biggest companies in the world are sort of pursuing those deposits, and again, BHP owned that deposit 10 years ago, sold it for a fraction of that price, and then came back and is paying a huge markup for it. Again, it's frustrating for me because if you look at copper's already been there for 20 years. The bulk of the world's deposits that are being built today are between 0.3 to 0.5%, whether Cobre Panama with First Quantum, one of the best operating base metal mines in the world is the ATIC mine in Scandinavia. That's a 0.2% copper deposit. That's even lower value than what we have. But they are operating, at the edge of the first quartile, because they're in a place with infrastructure. It's a large deposit with a low strip ratio, operated at the right scale in a location where you've got a productive workforce. And so, we tick all those boxes in terms of where we are in Timmins. Again, PEAs are these days aren't worth much, but again, we did it with Ausenco, who's a real engineering firm, and so again, we're confident in the numbers that we have there. We're 85% through our feasibility study. We're confident, in the outcome of what that's going to look like, and so having another 5, 10, 15 deposits to be able to sort of feed into that same model, we think is going to be highly compelling, for a global market that's desperate for large quantities of nickel from somewhere other than Indonesia.
If you're so confident, why are you raising money with what was it? Well, I think it was $10 million with Oramet.
Yeah.
As a loan facility. So
yeah.
I thought you were financed through to the end of the feasibility study.
Yeah, we are financed at the end of the feasibility study, but again, if you're actually building a project, there's work that continues after the feasibility study is complete. So there's engineering work, there's permitting work that needs to be done. Some of that work is best done in the winter time. And so to be able to do that work when it's optimum to do it and remain fully financed, beyond the end of the feasibility study, Ormet, we did a similar loan last year, which worked out quite well, and allowed us to take advantage of the market when the market was there after the LME froze in early March, and again being this well financed, gives us the luxury of coming back to the market when the conditions are there. We're in discussions, with a group of strategic investors, which are ongoing, and again, as we get closer to and beyond feasibility study, we expect to see some good news on that front as well. So for right now, as you may have noticed, the markets aren't particularly fantastic right now. So, we think this is a very cost-effective way to maintain a lot of optionality and continue to aggressively advance this project. Again, we've gone from hole 5 to feasibility study in just over 3 years, which is probably pretty much faster than anybody in the market today.
Well, let me talk about the facility, if you don't mind, because you can read a lot into the way that the company raises money. Yeah. This effectively bridging loan, it feels like, quite seemingly, well, it could be accused of being quite expensive money. So when you say it's a good way of raising money, and I get the stock market has been hammered and share prices are down across the board, but this is expensive money, isn't it?
No, if you look at what mining companies actually have to raise equity at, generally you're paying, if you're good, you get just to pay 6%. A lot of times it's 6% plus a pile of warrants. And then you're often doing it at 5, 10, 15% discount to your share price. Again, the types of the next round of investment that we're looking at isn't going to come with a 6%, advisor fee on top of it, and is not going to be done at a 10 or 15% of the discount. So, being able to have the cash in the bank to do the work we want to do this winter, and keep all those options open, we think that small amount of interest that we have to pay over 3 months is more than worth it.
Okay. I guess time will tell. I think in moments like this in the market, everything feels expensive. When we come out the other side, we'll be able to judge that more readily, I suspect. Just back on the work that you're doing for this feasibility study and what you're hoping to be able to include in it. Will Reid be a big part of that feasibility study, or is it all 100% on Crawford?
It's 100% Crawford. No, Reid is really about the beyond Crawford and to really establish, the larger resource base. Again, people might say, why are you spending money on exploration when you haven't got full value for the first 5 million tons? Very simply what it comes down to is, number one, the market's desperate for it. The Korean companies that we've been talking to, they're talking, in the order of 300, 400, 500,000 tons of nickel required just in North America to meet the kind of growth forecast that they need, in a decade or so. And that's the market today where there's 150,000 tons of nickel. So as big as Crawford is, again, Crawford would be the 5th largest sulfide operation when it's fully ramped up. They need 10 Crawfords, and there's no visibility or very little visibility on the other 9. So, we think within our land package that we could have, 4, 8, 12 Crawfords. And again, for a company like a BHP or Rio Tinto, that's the exact kind of scale, that they're looking for. The other big reason, and again, as a shareholder, why I think it's money well put to use is when you look at auctions, for base metal assets, world-class base metal assets go out for 0.8 to 1 times NAV, generally in a multi-bidder scenario. If you have the same asset with a lot of exploration potential, you can see that asset go out for anywhere up to 1.2 to 1.5 times NAV or greater. And, there's no better example of that than Noront earlier this year that went out at $600 million US, which was a substantial premium to the inherent NPV that was there because of the exploration potential that was there. So we think we do very wide space drilling on these targets. You'll see in Reid that's 400 meter step outs. All we're doing is drawing the boundary around the shape of the mineral at this point. Once we get more fully valued and the money is there at a reasonable price, then we'll drill it off. But again, if that bidder comes over the top, it gives us an ability to really talk about optionality. And if they're not prepared to pay full up, then that's great. They can have Crawford, and we'll take the rest. And do the same thing again, and create a lot more shareholder value with it.
Well, that's where I wanted to go, actually.
Yeah.
So you said you've done a loan with Ormet on the basis that there's some confidence about what the feasibility would look like. And I'm going to read into that what you saw in the PEA is translating into the feasibility study, right?
Yeah.
And if I do that, and I've got a sense of what I think Crawford's going to deliver for you. How homogenous, how alike are these different deposits going to be? Is it fairly kind of, in terms of the ore body, the grade, the all the kind of variables that one would look at to try and understand the economics? Are you literally saying when potentially you could have 4, you could have 8, you could have 12 Crawfords?
Yeah.
Am I able to look at the feasibility study when it comes out and goes, you know what? They'll all be roughly like this. The grades will be roughly like this. The economics will be roughly like this. I mean, how do I kind of get a sense of a projection of what the big guys might be looking at when they're talking? Yeah,
there'd be a plus or minus around that feasibility study number. But at the end of the day, once the rock is out of the ground, the rock is very, very similar. The process plant is all the same. The only real variable would be sort of the strip ratio, given the geometry of the specific deposits. But what we've got at Crawford, is likely a pretty average type setup for the different targets that we have. Reid's actually better. It's a big square. So if you think of mining, you want sort of a big square to the extent possible to optimize your stripping ratio. Sort of longer and narrow, and ends up being a little higher strip. And with Crawford, we're around 2 to 1, and so anything else on the other targets will be pretty similar. So they'll be able to take those economics and whatever other resource potential, pretty easily, sort of model that in terms of what the overall value for that entire land package could look like.
Right. Okay. We're still on schedule time-wise for feasibility end of the year.
End of the year. Yep. About 85% done. So the team's done a great job. Asenco and the rest of the engineering firms, have come through. So, we're quite happy where we are right now. So despite COVID and other challenges, it's come together quite nicely.
Right. And do you think the fact that you didn't get a strategic investor at the beginning of the year and raise the capital yourself hindered you at all?
No, and I mean, in the end, we again, having the Ormet bridge loan when we did last year gave us a lot of flexibility in terms of timing when we went to market, and again, we did the work so that with a bunch of institutional investors, and so we were able to raise $50 million in the beginning of March, at a much higher valuation. We expect our share price to get back to that valuation and then some, once we get into a better market here.
Right. Okay. With all due respect to institutional guys, they don't know what industry knows. So will you be engaging with strategic partners or industry or some kind of sales process or whatever you want to frame it as? Yeah. Once you've got the feasibility study out, or
we're in discussions. We're in discussions with a range of strategic investors right now. I'm off to Korea in the middle of October to continue on with a bunch of discussions that we're having there. We've got large mining companies, car companies, the whole private equity firms, and again, real private equity, not high cost of capital finance firms, which a lot of them actually are. There's, again, last year got cut out. So I'm not going to promise anything, but just say there's lots and lots of discussions going on right now.